Ladies and gentlemen, good evening and welcome to the Tata Communications Limited Q4 FY26 earnings conference call. The results for the quarter ending 31st March 2026 have been announced and the data pack is available on our website. Please note all participant lines will be in the listen-only mode and this conference is being recorded. We have with us from the management team Mr. Ganesh Lakshmi Narayanan, MD and CEO designate, Mr. Kabir Ahmed Shakir, CFO, Mr. Siddharth Mundra, CFO designate, Mr. Rajiv Sharma, Head of Investor Relations, and Mr. Deshna Patnaik, DGM Investor Relations. We will begin the call with opening remarks from Ganesh on the business performance and outlook, followed by Siddharth on the company's business and financial performance. Post that, we will open the floor for questions for the management. In the event that the management line drops, we request participants to stay connected while we reconnect them to the meeting. Some of the statements made in today's call may be forward-looking in nature and are subject to risks and uncertainties. The company does not undertake to update these forward-looking statements publicly. I now hand the call over to Ganesh. Over to you, sir.
Thanks, Inba. Thank you. Good evening, everybody, and thank you for joining our Q4 and full year FY26 earnings call. This is my first call as CEO and MD of this remarkable organization. It's a big privilege for me to lead Tata Communications in its next phase of growth. I would like to start by extending my sincere appreciation for Lakshmi Narayanan, who is a prior CEO. On behalf of the board and the entire organization, I want to thank Lakshmi for his remarkable contribution to this great institution. I also want to thank Kabir for his disciplined execution over the last many years. I wish the best to him in his future endeavors. Kabir is on the call today. I'm very glad he is joining today on the call. Given it is his last earnings call, we have decided that we will deflect all the tough questions to him. So keep your questions ready. I'm also pleased to welcome Siddharth, who will be taking over from Kabir. Rajiv, my investor relations head, is looking at me very anxiously. He and his team have been prepping me and Sid for this call. And one of the questions he wanted me to have an answer was, Ganesh, what's your North Star for Tata Communication? So I told him, Rajiv, I'm sure people on the call are smart enough to know that I'm still finding my way around our corporate headquarters in BKC. With just 10 days into the job after Lakshmi left, I'm not ready to point to any North Star. But however, I told him, I will share three important things. One, the most important one is what am I learning? I've been spending about 45 days. I'm spending with the team and the customers. Why I joined Tata Communication and my excitement about the long-term future of Tata Communications. In a way, it's my personal investment thesis to stay long on this company. Third, I will also share my views on near to medium term. So let me go through all of these three before we talk about FY26 and Q4. Over the past few weeks, it's been an exciting time for me. I've been meeting customers across markets, across geographies, engaging closely with our teams and spending time across our businesses. I am learning a lot. One thing I am very, very excited about is all the customers I've met. I met close to 24 customers so far. They've told me unanimously that Tata Communications is their preferred partner. It reflects in our NPS. Our score is 83. And particularly in the India market, we have an NPS score of 95. It's truly a golden benchmark among the peers in this industry. The second thing I heard from them is they want us to work across their digital infrastructure. They're expecting Tata Communications to bring the trusted infrastructure that will get them ready for the AI transformation. What I also see is that we are truly uniquely positioned as a global Comtech player. As a global Comtech player, today we serve more than 50% of the global Fortune 500 companies. I am told close to 60% of our revenue comes from international markets. We have a very broad portfolio as a ComTech player. Our digital platforms are now, for the first time, trending more than 50% of our data revenue. So I am learning a lot. We are taking care of our customers. We have a broad portfolio. We are truly uniquely positioned as a global ComTech player. Let me talk about the second one, which is my long-term excitement about what's happening in the industry. I personally see that there are two big trends shaping the future. And I firmly believe that we are uniquely poised to capture those two trends. One, if you look at all of our markets, in markets like India, Indonesia, in the developing markets, we see the customer front end is digitized. When I say customer front end is digitized, we can buy groceries online, we can trade shares online, we can order shoes online. But the back end is still yet to be digitized. The supply chain, the factories, the logistics, warehouses. My favorite example is that during COVID times, we could order pizza online and get it tracked every minute, but we didn't know where our oxygen cylinders were. I think there is a big opportunity in a lot of these markets where the back end of the country still need to be digitized. This is a white space where our network, our cloud, our edge capabilities will position us strongly. The second trend which is happening is the AI-led transformation. If you look at what's happening in AI, the real ROI of all AI investments, when the AI is working with enterprise intelligence, enterprise data, and that architecture is evolving very, very fast. You will know that for AI to work effectively, you need constant training, and that training is happening centrally. And the inference is moving to the edge. And this needs an unified infra. It needs an AI-ready connectivity, which is higher bandwidth, higher speed, but also something which will move at expected speed all the time. It also need that compute will be closer to the end customer. To these two trends, to power enterprise AI at scale and digitize the supply chain, our customers will need the unified infra from a trusted partner. That is what Tata Communication is all about. We are uniquely combining our network backbone, our cloud and security infra, and our new Commotion AI-enabled interaction fabric to build the programmable infra platform which will power enterprise AI at scale globally. So the long term, these two trends will create demand, and with the broad portfolio we have built, we are poised to capture that effectively. Let me go through the near to medium term view. We believe, and you all have been here, that we have gone through two distinct phases in the last 5 to 6 years. In the first phase of it, we got financially fit. We built a disciplined balance sheet. You've seen those results. And we used that balance sheet in the second phase, where we invested organically and inorganically to build our digital fabric. We believe we are entering a phase where we will prioritize profitable growth. As we evaluate the strategic choices, our focus on disciplined capital allocation will continue. So as a management team, me and Sid's immediate priority is ensuring continuity in strategy, strengthening the execution momentum, and delivering profitable growth. And I'm happy to share that our Q4 and FY26 results are in the right direction. For the full year of FY26, data growth came in at 9.4%. Our digital portfolio grew by almost 17% at 16.7%. The growth momentum was visible across the board for the digital platforms, but my personal call out is our next-gen connectivity platforms is leading the pack at 24% growth year over year. On this quarter's performance, I'm sure it will bring smile to all your faces. The data revenue for the quarter was up 6.1% quarter over quarter. The digital portfolio was almost up 10% quarter over quarter at 9.4%. And the core connectivity, again, my favorite, grown by 2.8% quarter over quarter. So as you could see, the growth was strong across the portfolio, especially our interaction fabric. Both employee interaction and customer interaction did really well. This quarter also, we also saw growing traction in our AI cloud and increasing adoption of our commercial AI platform. On the funnel, it continues to be robust. 70% of the open funnel comes from our digital fabric. I'm also pleased to share that our order booking for the quarter has been healthy double-digit year-over-year growth. Now, our international order book has been particularly strong this quarter. Let me talk about some of the wins. I think that brings color to our performance. See, one thing we are very pleased about is network transformation was a key theme for this quarter. Especially our ISO hybrid WAN has been a big win across regions. We closed multiple wins. We displaced incumbents and modernized legacy networks of our customers. Especially, I want to call out two notable wins in the UK region, one with a global wine major and one with a large automotive services player. I think these wins bring the best of what we have. We have the global fiber footprint. We have integrated services, and we have a software-defined platform which is making these wins possible. I also want to go a little deeper into few wins which actually truly brings out the power of the multi-tower portfolio we have built. One example is a leading global bank. They selected us to establish their global capability center, GCC, in India. It's a true digital fabric win, which included both our network fabric and the interaction fabric. This proves our ability to enable GCCs with secure, cloud-ready, globally connected network environment. It also allows seamless collaboration between India hubs and their employees worldwide. And as the GCCs continue to grow in India, it helps us to capitalize on that growth. The second win is we won a multi-million-dollar, multi-year deal in APAC with a global bank. And this is the exciting product, ISO Multi-Cloud. It connects across 4 locations, and MCC provides direct, low latency. And with the fiber backbone we have, we can provide sub-3 millisecond latency to major clouds, and it also lowers the egress cost of our customers. It's a scalable interconnect platform for large multi-cloud environments. Most enterprise customers are working with multiple clouds. And this ISO Multi-Cloud Connect is a big value add for our customers. The third win I want to call out is a large managed secure edge services win for a leading life insurance company. Across 155 locations, we demonstrated the strength of our integrated collaboration offering. We combined a UCaaS platform, devices, network, managed services to deliver a superior user experience and with tangible cost benefits for customers. These 3 wins, hopefully shows the power of our portfolio and how is it winning in the market. Let me close by saying, we are truly better positioned to serve global enterprises. With the unified infra they're going to need for AI transformation. We are uniquely combining our network fabric, our cloud and security fabric, and our AI-enabled interaction fabric into a programmable platform which will power enterprise AI at scale. In the short to medium term, we will get stronger with focused growth on profitability and capital discipline. I will now hand over to Siddharth to take you through the financial performance in more detail.
Thank you, Ganesh. It's a real pleasure to be a part of Tata Communications. Let me start with the full year performance. The FY26 consolidated revenue came in at rupees 24,803 crores, up by 7.3% YOY. Data revenues came in at rupees 21,352 crores, up 9.4% YOY. The Q4 FY26 consolidated revenue came in at rupees 6,554 crores, growing 5.9% QOQ and 9.4% YOY. The top line has certain forex benefits accruing from a strengthening dollar. Normalizing for the same, the revenue growth stood at 3.8% on QOQ and 3.7% on a YOY basis. Data revenue for the quarter came in at rupees 5,684 crores, growing 6.1% QOQ and 11.5% YOY. As we look ahead, we expect the momentum to continue, even as we remain mindful of potential near-term headwinds arising from geopolitical developments in West Asia. FY26 consolidated EBITDA came in at rupees 4,822 crores, up 5.5% YOY. EBITDA margins for the full year were at 19.4%, around 30 bips lower on a YOY basis. The decline in margins were primarily driven by a shift in the data revenue mix. EBITDA for the quarter came in at rupees 1,284 crores, up 4.5% QOQ and 14.4% YOY. Our EBITDA margins for the quarter were at 19.6%, lower by 25 bips QOQ and 86 bips on a YOY basis. Data EBITDA for the quarter came in at rupees 1,048 crores, up 3.4% QOQ and 17.6% YOY. Data EBITDA margin for the quarter stood at 18.4%, down 47 bips QOQ and up 96 bips YOY. The digital margin in this quarter has shown improvement, and we will continue to monitor to see how these sustain. FY26 full year PAT for the continuing business stood at 1,044 crores, down 35.8% on a YOY basis. Last year's PAT had profits from sale of assets. Adjusted for this, the FY26 PAT has grown by 8.1% on a YOY basis. PAT for the quarter came in at rupees 263 crores, lower by 28% on QOQ and 65% on a YOY basis. Q4 tax rate is higher, primarily due to tax incidences pertaining to certain one-offs and prior period items in foreign jurisdictions. The FY26 consolidated free cash flow was at rupees 1,474 crores, which is almost 4x of the FY25 levels, driven by tax refunds and better working capital management. FCF for the quarter stood at rupees 828 crores, lower on a QOQ basis, primarily because of the tax refunds that came in last quarter. Cash capex for this quarter stood at rupees 718 crores. Our FY26 consolidated cash capex is at rupees 2,433 crores and remains within our range of 9 to 10% of overall sales. We ended the year with net debt of rupees 9,601 crores, driven lower by better working capital management. The net debt to EBITDA stood at 1.99x. ROCE came in at 14.9%, which was up 51 basis points on a QOQ basis. Our ROCE is based on 12 months rolling numbers. On the subsidiaries, the TCTS revenue for the quarter came in at 198 crores, up 3.9% on a QOQ basis and down 33% on a YOY basis. EBITDA margins improved to 23.3%. TCR revenue for the quarter came in at rupees 235 crores, up 8.4% QOQ and 30.1% on a YOY basis. EBITDA margin stood at 60.2%. Overall, it was a very satisfactory quarter with robust digital revenue growth, improving ROCE, and net debt to EBITDA coming down below 2x and digital losses trending downwards. I will now ask the operator to open the forum for Q&A.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may click on the raise hand icon from the participant tab on your screen. We request our participants to please restrict to 2 questions and then return to the queue for more questions. To rejoin the queue, you may click raise hand icon again. We will wait for a few seconds until the question queue assembles. We take the first question from Sanjesh Jain of ICICI Securities. Please go ahead.
Yeah, good evening. Hopefully you can hear me.
Yes, Sanjay, we can hear you.
Yeah,
Sanjesh.
thanks.
Sanjesh.
Thanks for the opportunity. Ganesh, you covered a lot of things which I thought I will ask in your opening statement. But one small, probably, if you would have dwelt on it, you said you have met over 2 dozen customers. Hopefully, you have met a customer who is unsatisfied. And what is one complaint or an opportunity or a challenge you are hearing from a customer which Tatacom need to address probably in next 1 to 3 years? And again, what will be your priority for next 1 to 3 years?
So on the priority for next 2 to 3 years, Sanjesh, you have to give me a little bit of time. After I finish 100 days, I will come and talk about FY27. Definitely want to come and talk about our long-term priorities immediately after that. I think I'm still learning a lot, so I'll come back on the longer-term priorities. The conversations with my customers, what is very encouraging for me is they're not just talking about connectivity. So I'll give you an example of an insurance customer I met. The conversation was around how can we build AI agents who can operate as relationship managers for their field service agents. So there's an expectation that Tatacom can serve them to scale enterprise AI. And we have all the ingredients to do that. We have the Commotion platform, which can help them build the voice AI solution. We have the multi-cloud connect platform to make sure that those AI agents can connect with all the enterprise data they need. We have the connectivity platform to make sure that all the insurance branches can make use of those AI agents. I think the customers want us to say yes more often and say yes across the digital portfolio. It's very encouraging to hear they're expecting Tata Communications to help them to scale enterprise AI with a broad portfolio we have built. Customers want us to do more. And we need to do a better job of explaining the full portfolio we have built in a truly integrated fashion. I think they're pleasantly surprised that we have all these capabilities. I think our immediate priority is to make sure that we tell the story of the integrated unified infra, which can power enterprise scale AI.
That's clear, Ganesh. But you are coming from a global company which has a large AI portfolio. Now, when you look at Tata Communication, how do you see the preparedness for transition or providing these AI-led services, which you appear to be very confident and excited about? But from a preparedness, from an organization perspective, where are we?
Again, it's too early for me to comment on our readiness, but from what I've learned so far, our sales teams need to be enabled more to tell this integrated story. We need to be able to not just talk about individual towers of our product, how we can deliver outcomes for them. That is number one. Second, we really need to make sure that we do a better job of bringing this voice AI and the AI OS, which we are building through Commotion, to life. I think that's another important thing we need to do. Third, they are really looking at us to deliver them the network which will enable them for the centralized training and edge inferencing. That is going to need a high bandwidth, high speed, predictable speed, which we need. I think the ISO DC to DC connectivity product we have launched, we need to make sure that we can serve the global customers. And finally, we need to really increase the awareness of everything we have built and we are building with more than 300 Fortune 500 customers we serve globally. That is all I have learned so far. I'll come and share more as we think about it, but I think this opportunity to help enterprise AI scale with the unified infra is an exciting opportunity for all of us.
That's quite helpful. It appears that you're seeing more gap in the communication than the product itself, right? From whatever I can hear you, it appears that we are doing a lot of things, but customer are clearly not appraised with entire portfolio services and all.
Both, I would say, is opportunity, but the first thing is to make sure that our story gets out in the right fashion, and the integrated unified infra story gets out to our customers in a better fashion.
Great. Ganesh, my second question is on the order book. FY25 again was a double-digit growth year for us on the order book. FY26, you said we had a good double-digit growth, but when we look at revenue growth, we are barely touching 10%, right? And this is a quarter we came close to that, else we were even lower than that. So how should we think about the strong order book which we built in past 2 years, and funnel appears to be good by your commentary. Now, when should be seeing a healthy double-digit growth, probably mid-teens or early teens kind of a growth? Now there is some forex element also. We are looking purely an underlying growth which appears less than 9%. Now, what is stopping this conversion of order book into a equally strong revenue growth?
I think my immediate priority is to focus on growth and profitability. I have heard from the prior transcripts that our EBITDA growth is flat to low single digits, and you would like us to change. I would like to make sure that in the near to medium term, we are focusing on improving the quality and durability of the growth. We want to make sure that the improvement in profitability we have seen because of the digital growth happening at 16.7, the operating leverage kicking in, the losses on the digital portfolio has come down in Q4. We would like to make sure that the digital portfolio breaks even at the earliest. We also want to make sure that we balances the portfolio between connectivity products, usage products, and digital products. So my focus is going to be on growth and profitability to make sure that the digital products breaks even quickly, and we focus on improving the absolute EBITDA growth year over year.
And when you say, Ganesh, you want to improve the profitability, this is, I hope, with an eye that the investment in the future growth is not compromised, right?
Absolutely. I think what I'm very encouraged to see is that if you look at Q4, our absolute EBITDA has grown in double digits. Our digital products have grown at 16.7%. We are seeing the operating leverage kicking in. We have also used this year, the last year, to come out of low margin and onerous contracts. You saw that our EBITDA to debt ratio came down below 2. And more importantly, across our